Hello, it is the 10th of February 2011. Welcome to today's Silver Log and the Silver Analysis. We'll start off on the daily candlestick chart. And I want to reply mainly to the video talking about caution for silver because I have to highly disagree with what was said in that video. And to me, the caution should be if you base it on the charts that the shorts are really getting hammered in here, as it seems that it's poised to be making newer highs. As far as concerns for the downside, it's the little adage of these contracts being paper contracts, and then the powers that be, the big bankers, if you will, a lot of times they can manipulate the markets to the direction that they feel is in their best interest. And if they feel that it's in their best interest to bring it down to below 25, 24, 22, or whatever, and they're able to do it, then they can do it. That's what concerns me towards the downside. But overall, I was stating yesterday that this little red candle in here, it was a boring day, but very, very productive and a positive for the bullish side. If we take a look at this high of 31.28 and this low of 26.30, what we can do is we can take some Fibonacci math, and the breakout point on the silver market was all the way down to 1774. So if we take the difference of the two, that gives us 1354. If we multiply this by 61.8% and add this to the 1774 breakout, that meant the Fibonacci bottom was 2611. So it was 19 cents shy of hitting the 61.8%, as this was 12 cents shy of hitting the 3140 upside target within the upside Fibonacci, as I like to call it. So now we take this 3128 number and we subtract 26.3 from the market and multiply, so it comes to 498. So 61.8%. Okay, what am I? There we are. If we take that 307 and add this to 2630, then that gives us a mark of 2938. And this was a big, big level. 2938, which is up towards here. That was the 2/3 Fibonacci from this entire run. For this run, the selling to be valid or to stay legitimate, it really needed to stay below this mark. It has not done that. And because it not only has went above it, but has held above it for a decent amount of time, this is a failed move, which can oftentimes bring fast moves in the opposite direction. The opposite direction from lower is higher. And thus, that's the reason why I'd be concerned for anyone whom is shorting this market, because it does seem as if it's poised to be making a new move towards the upside. Now, the 38.2% Fibonacci, if we take the difference of, say, 498, multiply 0.618, and we subtract 307 from 3128, it's going to come up as a negative, but that's fine, is 2820. So at 2820, when we first got up there before, it was resistance for a few days in here, which is very normal when you have an area. If it holds it for a small period of time and then it's ready to break above it, I still wouldn't mind to have a test back towards the 2938 area, because a lot of times resistance becomes support. Now, it didn't become support here because it went above it and it just bursted above it again. But if it comes down towards this area, there is nothing wrong with that whatsoever. And therefore, for this selling to be a failed move, this run up here, then it's going to have to break below 61.8%. And right now, these highs are $30.50. So if we take 30.50, subtract 26.3, this gives us a result of 420. And if we multiply this by 61.8%, that gives us 259. Subtract this number by 30.5. That means the level is 2790, really even 28. So it could still theoretically come down towards this level. Now it would be neutral at 28, but it would stop. It won't be bearish until we break below 28, because we've established 28 to be a monster support level. I tried to draw a line there. I don't need to, because we can. It's already got a line on the chart anyway. But 28 is a massive level. It was resistant here, support, support, resistance becoming support here. And thus, if we go down to 28, it would stay really more neutral than anything. I'm going to finish this off with the 15-minute line chart. And I guess you can say the only bearishness that I see is over the last couple of days within this downtrend. But it's also normal to have markets correct through price or through time. You have this gain, and right now it's correcting through price right now. As a bullish indicator, I'd like to see it find support at either this trend line or the 5-day moving average. Doing that successfully, then that can give it can give it enough legs needed to go up towards higher gains. So I'd like to thank you for watching. Have yourself a magnificent day. Bye-bye.